All right, guys. Are you serious? Are you serious? Do you know what time it is? It's time for Colin Plume and Noble Gold. I'm telling you right now. And boy, what a great time to bring Colin in here because things are going crazy. Interest rates are falling like crazy, and gold is going up. Colin in here because things are going crazy. Yeah, we got another Paul Begley breaking in. And we don't need two Paul Begleys. One's enough. So, Colin, your situation here, you're coming in, interest rates are falling, gold is soaring. This is and new currencies are forming. You got to break this down for us. How you doing?
Yeah, no, it's funny. When I told my wife that I was going to be on your show today, she's like, "Man, you must know these guys." I mean, it's been so many years, and I always say that I love to be on your show. So it's just great. It's like an old friend, jumping into the chair but yeah, I mean, we've been talking about money, sound money, what's money, fiat money for many years, and I think it's really interesting to look at what's happened over the last 8 years since we've been doing this, and then really what's happening today, and just kind of looking at breaking down what people feel about what's happening in the economy. And people there's a distrust more than ever in the economy. There's a distrust in what this administration is doing in terms of how to grow the economy, and there's just a general distrust in the numbers. I mean, people don't believe the numbers the way that they used to. They don't believe the inflation numbers anymore. Now that we saw inflation 2 years ago hit 9%, which is, if they're saying 9%, it's probably 20%, right?
Right. Right.
So right now is just a very unusual time in history where we have this huge disconnect between what the Fed is telling us and what we should do. And the Feds, I love when they lower interest rates 50 basis points, which is a pretty massive cut. And they said that Powell said it was just a recalibration. That's all.
Yeah.
Just going in, just recalibrating. Like tuning up the car, right? Nothing to be concerned about. But 50 basis points, when they haven't lowered rates in over almost 3 years, is a pretty significant cut, and it is a warning bell that things are not going as great as they want, and so they had to catch up. They really they had to catch up, and it'll be interesting that a lot of the people that bet on these things and the stockbrokers, they think we're going to have 2 to 3 cuts next year.
Wow.
Pretty significant amount of cuts, which is I think a sign that the economy is not doing as well. Also, I think and I've said this for many years, that commercial banking has to have these cuts. They literally cannot survive unless they get cuts. And people ask me, like, why do you say those things? Is that so much of the debt is at 3 to 4%. In the commercial world, it's not like residential. You don't get 30-year loans. Commercial debt is 3, 5, and 7, and 10 years. 10 years is the maximum. I've never seen any commercial debt past 10 years.
Commercial is it's capital investment, and you can only accrue. I think you can only depreciate for what, 5, maybe 7 years.
Well, you can. It depends on the asset. Apartments you can depreciate for 29 and a half years. Other retail you can depreciate. So. And that's good. The problem is that banks don't want to take on too much of this debt. It's massive.
Yeah.
So we're talking about apartments, we're talking about office buildings. So we have trillions of dollars coming due next year. That the initial note was at a 3% or 3.5%. If they had to refinance with where vacancy is today, which is probably 20, 30, 40%.
Oh, it's bad.
To refinance at 6.5% or 7%, they couldn't do it. So basically, all this property goes back to the banks. It just creates a whole problem that they don't want to have. So that's why I believe they've really had to lower rates, and they're going to have to continue to lower rates, so that those refinances maybe come in the mid 5s, maybe the high 4s, and it's still not great, but it's still better. The debt service is still more reasonable, because banks will get wiped out. I mean, mid-sized banks that hold a lot of this debt, they will get just completely destroyed if they have to take all this property back because there's no way for them to monetize that, getting those property back. They can't turn around and sell it at a profit because they're underwater.
They're underwater. And who's going to buy? I mean, you're right. And then if they sell it, they're going to be underwater. They can't do that.
Correct. Exactly.
What about the residential side? Because I was just talking to a lady, she's a realtor, and she said, well, you know, I sold 46 homes down here in Florida 2 years ago. Last year I sold 3.
Mm-hmm.
Now she says this year, right now, you know, she's getting ready to close on her 8th. Okay. So, and just because of the anticipation of this half a point, banks started already lowering interest rates and things started moving.
Correct.
So,
yeah.
That's going to help the residential side, right, Colin? I mean,
yeah, we will see it pick up. I mean, the problem with that, with the way the Fed's done things, is when they raise it too quickly and they lower it too quickly, you can't create a normal market, because everything when you buy a property of any size, you need comps. You need to have a comp to justify the price to the bank.
Right.
So when you create this up and down movement, you can't have any consistent comps. That's why your friend this year is starting to see some things happen, because they finally have some comps to go, okay, this house is no longer worth 600,000. Now it's worth 400. That's what's closing. And I can get a loan based on that 400,000. That's what banks need to justify. They need your income, and you need to prove that, and the property needs to prove that. So that's why we had this. The Fed has really screwed up this market by not raising rates too fast, and now they're going to lower rates too fast, and they're going to create this weird, strange market that's not going to make any sense. So people again are probably going to overpay because rates are going to drop. It's just this weird cycle. In some ways, I wish they kept rates a little higher, and they kind of kept it there, because it does create a more normal market. At the end of the day, I think people want to own assets. One of the biggest assets people can own is a home. And so with them creating this artificial bubble by lowering rates too fast, it's just going to drive prices up, and it's not real value, right? It's not a real, by them pushing rates too quick, it's not a real value.
So does that affect inflation as well? I mean, inflation
absolutely
going to go up, right?
Correct. It'll absolutely affect. And then, you know, obviously, depending on who gets in office, both sides really have plans that will increase inflation. One has, you know, a side that will increase taxes and inflation, which I don't think anybody wants. But, you know, Trump's potential plan with the tariffs, if he moves forward, that would increase inflation too.
Yes. Now,
the goal would be that, yeah, we would pay more for goods, but we would keep the money in the U.S., right? If this shirt was made here in the U.S., and yeah, if I paid 10 or 15% more, it's still good because the money is circulated here.
Here, right.
Right.
And
so
it's creating jobs because there are going to be more manufacturers jump up because you don't want to buy stuff from overseas and pay a 25% tariff.
Correct.
So it is going to create the economy. The money's going to stay in America. But inflation will still go up. If we go Harris's way, we're going to get taxed, and inflation's, and she's going to spend it faster than she can collect it, and then the inflation's even going to go up.
Yeah. You know. I'll tell you a story that my dad and my grandfather were in the garment manufacturing business, and they made clothes. They made clothes their whole life, and the big problem is, and Dockers is a great example of a pant. My dad always would talk about it. He said, so when he got in the business 30, 40 years ago, the Docker pant cost like $20, but it wasn't a great pant. It wasn't made well. You know, they were trying to make it better, but they didn't. Over 20 years, that pant basically costs about 20 or 25, basically costs the same price. We moved all that overseas. Yeah, the quality got better. The price was the same because we just basically moved it to another country.
Shifted the supply chain to another country.
And it's the big problem that we created in this country in the late 70s, early 80s, when we decided that it was better for us to buy cheap goods than recirculate the money here in the US. And now, since COVID, everybody's felt that pain.
Yeah.
Because supply chain issues, the cost of goods went up. We couldn't get access to things that we needed because we just didn't make anything. So now that's why I believe that, you know, Trump is such a strong choice, because he really understands this from a business point of view, is that we need to be more independent. We need to make things here in this country. So that's the big picture goal. One of the things that he wants. That's why he's going after tariffs. You know, it's
That's
like, I understand it will cost us more money, but at least the money stays here. And in the end, that's probably better for our economy.
Right.
Unemployment is going up. You know, they had a big snafu with the payroll unemployment numbers where they were off by 800,000.
That's insane. I mean, how do you get off 800,000? I mean, that's deliberate.
Yeah, people that don't, you should look this up. People that aren't in the know about this. You know, they last year the unemployment numbers came in and they looks like they were trending in a good direction. And then they came this year about 2 months ago and decided that they said basically they were off by 800,000 jobs. And so that's why Powell went into this spin cycle of, oh shit, I got to fix things quick. Excuse my French, and had to catch up, right? And so that's where he is. That's where we are today. So these, every Fed meeting right now is so critical. But I think there's going to be some bailouts, even with rates coming down next year. I still think they're going to have to bail out the commercial real estate market.
Banks?
Yeah, I think they're going to have to bail out banks. I don't think it's going to be as good because our really two options are in this country is that just let us have 4 banks or bail out these mid-sized banks. And both are bad options.
That's bad options.
They're both terrible options, but at the end of the day, I still think there's going to be too much debt, a lot of these office buildings. So I think they're going to do either some bailouts or some massive government injection to kind of keep commercial alive and moving on. So many jobs, so much money involved in that. So I think we're going to see that rates coming down. In some ways, we're starting to see some hints of quantitative easing, opening up the money supply. So that will create more opportunities, absolutely more opportunities for debt. But it also, in a lot of ways, it hurts middle America because we've been lucky for last years. We've been able to make a decent return in banks. Some people made 4%. They're happy. That's
4, 5. Yeah.
5%. That's all going to come down. That's going to be. We're going to be in the 3s, and I think by end of 2025, the banks are going to be about like high 1s, maybe 2% paying. So you're going to have to make some choices. If you're sitting in a lot of cash, there's been this glutton of cash. And in a way, what they're doing, the government and the Fed's doing, is like you got to get out there and do stuff with this money, right? Like we're not going to pay this return anymore. You're going to have to make some moves. And so it's going to force people to either get into some riskier assets or some safer assets. So it's going to be a very fascinating with the election and then everything going on with the Fed. There's a lot happening in our economy right now. But a few things to keep in mind is unemployment. If we see it to start hit the high 4s, which I would not be surprised if we hit the high 4s in terms of unemployment, I think they're going to get very aggressive with interest rates. And I wouldn't be surprised if we saw another 50 basis point cut if we see a very negative, because basically it's a sign that the economy is going worse. It's out of control.
Right.
Fed's going to want to try to inject cheap money to get business owners into higher
investing. Yeah, and I think Harris even brought this up. She's saying she'd like to give $50,000 to new startups, probably more for minority business owners, but trying to create some. But again, if that's created based on borrowing or printing money, that's not really going to help us. I think Trump's a play of saying, let's collect from all the world with the tariffs. Let's incentivize manufacturing growth in America, make America first. And then even though the inflation may go up, how about this? Cut energy cost in half by drilling and opening up and getting rid of the red tape, because that could counter.
Absolutely.
If you lower interest, if you lower the energy costs, which are killing people,
right?
And even if the tariff money comes flowing in, it still may balance out the inflation not as bad. That's a gamble. That's a move.
Yeah. And that's why EV, I know everybody, there's a lot of opinions on EV, whether it does what it's supposed to do for the climate. But I will say, just in terms of costs, EV vehicles are the cheapest they've ever been.
Yes, that's true.
And, in my book, which it's ready to come out any day now, you're basically at these new $30,000 costs for these cars, which means that's $30,000, $35,000 new. You can get some of these used ones cheaper. I've seen used EVs in the $18,000, $20,000 range.
Yeah,
you're saving, once you buy that car, you're going to save about 5 times on just your average monthly gas, right? You're saving 5 times the money over the lifespan of that car. And if you're smart and you don't lease your car and you buy it, you put that money back in your pocket and you keep that energy cost down, right? As you're talking about.
Yep.
That's a massive savings overall. And I do think oil costs will come down for a little bit.
Yeah.
And I do think that they'll drill more. And I do, but at the end of the day, everyone's divesting from oil, right? They're not going to long-term. Saudi, all these countries are divesting. They're trying to get into hospitality and they're trying to move into money. And and then this morning, the BRICS, there's all these reports coming out about the BRIC nations meeting in about 1 month. They're meeting in Russia and they're pushing very hard for this unit, this currency. And it's not easy. It's not going to be easy for them to move on a currency with all these countries, but they absolutely want to use a currency that is backed by gold. They've been talking about it. They're really pushing towards it. And, it's the divesting interest of countries moving away from the dollar and bonds has already happened. We're at the lowest point that we've been in about 26 years. We're at 57% of global treasuries in the dollar. They're moving away from the dollar. So you got to jump on the bandwagon and realize what countries are doing. Russia and China and these BRIC nations, Turkey, all these Middle East, they're just gobbling up gold left, right, and center. And that's part of the reason that we've seen the price go up. I think the idea that the BRICS could go on and have their currency backed by gold is obviously something. But and then I just look at the geopolitical tension, all the what's going on in the Middle East, everything that's happening globally, Ukraine. I mean, anytime you see these things happen, people are going to flee equities and they're going to go into safety investments. And I think that's why we've seen, gold go on this massive run. I mean, we're up from a year ago to today, we're up 35% in gold.
It's unbelievable. So in other words, folks, gold right now is over $2,600 an ounce. It's the highest ever. If the BRIC nations use gold as a gold standard, or at least half of it, 50% gold standard, whatever. That's why they're all gobbling it. Russia, China, all these guys, even the Middle Eastern countries. That means gold is going to soar. It has to.
Yeah, there's no doubt. There'd be no other way for it to go. It wouldn't make any sense.
So, because it's obviously you're thinking, oh man, gold's at $2,600 an ounce. Whew, that's the ceiling. I don't want to really buy now. It's probably going to settle back down at 2,200. No, what I'm hearing you say, no, 2,600 is probably that might be the basement.
Yeah,
where we're going.
Yeah, so you have the BRIC nation. That's one issue to look at. You have geopolitical tension. Then you also have, if you look at the charts when they've had high interest rates and they lower interest rates, and you look at that, you go to look at 2009, the same thing happened. And basically what happened, and listen, I can't predict what's going to happen, but this is what I think is going to happen. I think they're going to lower rates and do some form of quantitative easing, whether it's direct quantitative easing, which they did in 2009. And you look at the charts from 2009 to 2009. You can see what gold did, but and rates were up. That was a very short window. It's eerie how similar.
Is it a replay? It's almost a replay of 2008.
Yeah. It was like a 2.5 year where we had high rates. Same thing happened, and then they pulled rates down. I hope they don't pull rates down to the threes again, because I think it's not really where things should be, right? It should be based more realistic. I think this number of the 2% inflation is not a realistic number. I think they should set the new bar at 3. And then if they brought rates down to the mid 4s or 5s, that creates a little bit more of a normal market. When you put rates down to 3.5%, 3%, I know people have mortgages in the high 2s. When you do that, you're basically just giving the richest people in the world free money to just do whatever they want. And it doesn't create a normal market. It's not a normal market for anybody. So, because you want to have borrowing rates at a normal rate, be able to put money in the bank at somewhat of a normal rate, maybe in the 2.5%, 3% range.
Right.
But don't create this big, thing. But I in my opinion, unfortunately, I think they're going to do it. I think this is what we're destined, these booms and busts. And, it's really just a matter of, if you're looking at it as yourself, like, how do I take advantage of the situation? Unfortunately, this is what they're going to do. How do I take advantage? And I really just think assets are the key. All assets, physical assets that you can afford to hold And that's been the big problem with real estate. A lot of people have not been able to afford to
So
hold.
you're saying either invest in either gold, silver, property, real estate,
That you can
maybe Bitcoin.
Bitcoin. These are assets, right? These are assets
right.
that, yeah, maybe you buy real estate, you have a little bit of debt behind it, but it's controllable. It's debt that you can afford. Don't go crazy. But these things, you want to have liquidity and you want to have assets that have a limited supply. And that's what I predict will happen over the next few years. I just think these assets will do well. Yeah, gold could go down to 2,200, 20. Sure, it could all fluctuate. Things could all change. But I think if you look at what is happening, it's quite scary. If you go back to 2008, 2009, and you look at what happened in money, you look at the whole market, what potentially could happen. And if you think that could happen again, then I think these assets will do well. Ultimately, at the end of the day, we are focused on this one thing, and the yellow metal, the silver metal, this is what we focus on. And silver is obviously undervalued, I think, at this point. It's in the $3 range. UBS, some of the big guys out there believe silver will outperform gold this year, which would be interesting because we don't have a lot of time left, and gold's up, pretty significantly this year. So it'd be interesting to see if that can happen. But silver would have to probably break 34, 35 this year to see silver outpace gold. I think it's you have to look at the whole thing and as diversification, and that's what I always talk to people. Over the weekend I was talking to a gentleman, very wealthy gentleman, we were at a dinner party and just talking about assets, and he's recently started to acquire some gold and silver, and his thought was it's just like insurance. He just bought some insurance against the other things in his portfolio. That's the way he looked at it.
Diversifying.
Yeah, it's diversifying. It's like, I got a lot of this, I got a lot of that. Now I got to protect myself. And I think right now, people that are savvy, over the next few years are be like, wow, I have this massive gain. I mean, we have people that bought gold from us in the $1,300 range.
Yeah.
So, maybe they see an opportunity, they sell a little gold to get into something else. Everybody's got a different idea, but having that liquidity, that real liquidity at any time is something that people really treasure. And I think that's the beauty behind, these assets.
So over at Noble Gold, folks, if you go to PestroPaulGold.com, you can set up a gold IRA or a silver IRA, or roll over that 401k and into a gold directed IRA. And they're giving, if you qualify, you're going to get 10 of these Donald Trump coins, which are probably, if they shoot at him again, they're going to keep going up. Okay. I mean, that's all I can say. And then of course, or you can get 10 of those, or you can get this 10-ounce beautiful silver bar with the United We Stand, the flag on it. Or some of you may just want to go and pick up the phone and call and order these silver. Is that right, Colin?
Absolutely. Yeah. We can ship directly to your doorstep. We ship it in a nondescript package. We call you with the tracking number. We get it all the way to your doorstep. And then at any time you got questions or you're ready to sell or, whatever you want to do, we're here. So we're old school. You're going to talk to people. You're going to talk to people here in the US that do that. This is what we do, right? This is what we specialize in. You're going to talk to a friendly voice, someone you're going to like, and we're going to take care of you in space.
Is it difficult for folks to roll over that 401k, or do you guys walk it through the process?
We do all the heavy lifting. Listen, the custodians don't want to do it, right? We've seen some unbelievable things. I saw something a few weeks ago that I couldn't believe. They just kept rejecting the transfer form, even though it was absolutely correct, because they didn't want to do it. So eventually the client just had to call and threaten them and just basically say, like, I'm only doing 10%. I'll do the rest if you don't get your act together. And that somehow the same exact form was accepted after that happened. But we do, we get involved. We were on the phone with the client trying to help them through all this. The problem in this world is that these custodians, a lot of times, they think the money is their money. And it's not. It's your money. You work for it. You should be able to do whatever you want with it. And so that's been, that's always been a challenge since I've been in the business. But yeah, we will be your ally if you decide to do this with us, and we'll be there every step of the way.
And there's people out there, Colin, to have some cash in the bank that I know that interest rates are going to start coming down.
Yeah.
They may want to shift 20% or 15% of their portfolio into precious metals. I mean, and it might be a good time to do it. You think so?
Whatever amount people feel comfortable. I think the first thing is just call, get a representative that you're gonna like, get comfortable, learn, and get the information. And then when you're ready to make the decision, you've gotten that information that you need. Check us out. We've been around a long time. I've been in the space for 16 years. We've shipped billions of dollars in gold and silver. It's an absolute pleasure. And the nice thing about this asset is that you own it. We're not in control of it. You own it. We just help you get there. There's no like, annual fees that we charge, any of that stuff. It's your asset. We're just here to help you get it. And then if you're ready to sell it, we'll buy it back from you, at any time at a great price. But we're here for the whole process. And a lot of people are coming into their required mandatory distribution. So we have clients, if they're listening, if you need to do a day's distribution, call us now, get in early, because you got to get those things done before the end of the year. And it takes time to do those things. So if you have to do a distribution, you're with Noble Gold, call us now, tell us how much you need. Let's get that taken care of. Because the IRS is not friendly when it comes. If you don't take your distribution and pay them the money they owe, they are not friendly.
They're not happy. No.
I'm not giving tax advice, but I just know that you got to get it done early. So anyone out there required distribution that you need to do this year, call us. Let's get that going. You can take it in the metal. You can take it in cash. You can do whatever you want, but we just, we need some time to handle that for you.
So Colin, as we go into the election, obviously in the next few weeks, strategies of the economy are going to shift one way or the other.
Absolutely.
Now, but interest rates are going to keep coming down no matter who wins the election. That you pretty well know.
And debt will continue to go up no matter who.
And debt will go up. And knowing Washington, D.C., spending there will continue to go up.
Absolutely.
So those things you can count on. The question is, are they going to raise taxes or not?
Yeah.
Or are they going to don't raise taxes and collect from the tariffs?
Correct. Exactly. That's pretty much it. I mean, are we going to focus on business owners and grow that way, or are we going to try to tax, in my opinion, a lot of people that are near retirement? A lot of that money is going to get taxed near retirement. They're also going to tax business owners. So in my opinion, if you think hiring is slow now, wait till you try to tax business owners pretty significantly.
Yeah, that's not going to go. People are not going to. Then business owners won't invest, and they'll pull back. So you got one candidate says she wants to take corporate tax rates to 28%. You got the other one, Trump wants to cut it to 15%.
Yeah.
You do the math on how that will affect the economy as far as investment, obviously. And then Harris wants to raise the death tax, which I think is the most criminal tax of all time. Why would you tax someone when they die? Yeah. When that's the inheritance for the kids after people have already paid their taxes. This is like, it's almost as bad as Gavin Newsom's. If you leave California, but they're going to tax you as you go. It's about the same concept. I'm praying that this stuff don't happen, but
they're not going to, there's no King Tut. They're not going to let you have your gold when you die. They're going to get that money when you're
You mean you can't be buried in a pyramid and take it with you? I mean,
you're going to get that money on the way out no matter what. Yeah. So
give
it to your kids earlier than that, give it to them before you pass, because they can probably use the money and Uncle Sam's going to get it anyway.
No, I know it.
Yeah.
Anyway, I think this is really good advice that diversify. If anything, no matter who wins the White House, I think you do want to diversify because inflation is weird right now, and I can't count on the numbers. And one thing for sure, you need to have is more assets than liquid cash or fiat cash.
Yeah, that's the key. That's the way you protect yourself against inflation. We're $35 trillion in debt. Our debt as a country goes up $1 trillion every 100 days or so, which is an unbelievable number. So it's a good thing to do. So we got a lot of good information. If you want to learn about gold, silver, platinum, palladium, any of those things, call us. Mention you heard this on Passion Paul's show, and we're happy to help and be of service. And even if you get information that's not right for you, great. whatever it is, but call and we can help you get some good information.
And there's the number, folks, 877-646-5347. Tell them Pastor Paul said do it, and you'll be happy that you did. And there's always a friendly voice on the other side of the phone. And I love this about your company. You love to take the phone call, okay? You want to work with the customer. And, you guys just got a great company. Good business ethics. I know you love the Lord, and bless your family.
Thank you.
Continue in what you're doing. And we're glad to be a partner with you. We really are here at Paul Begley Prophecy Ministries. So.
Thank you, Pastor Paul, as always.
God bless. All right, folks, you heard it. You heard the man. This is the plan. Stick with it, all right? And we'll be back with more information. Especially, I'll be back to talk about the hurricane, because obviously it's threatening, and we got to figure out which way it's going. It's sort of like the economy. You got to figure out which way it's going. All right. So God bless all of you.